so many people initially think, let's get into business. Let's go. Let's partner with somebody else. And I think the reason that people do that is one, this idea of fear. As a business owner, we're constantly dealing with fear, whether we're just getting started, we've been around for 20 years, whether we're failing or we're massively successful. Business owners always have this idea of fear.
What's up, everyone? Welcome back to the Campfire Capitalism Podcast. I'm your host, Desmond Dixon. Today, we have no Heather or Josh, and we have a very special guest today. His name is Mr. Mike Jesowshek. He is the podcast, the host of the podcast of Small Business Tax Savings. He has spent his entire career as an entrepreneur. He was a CFO and co-founder of several companies. Throughout the journey, he has experienced all business stages from good to bad. Mike's mission is to help hardworking business owners overcome complex IRS rules and overinflated tax bills so that they can enjoy the fruits of their labor. This is how the Small Business Tax Saving Podcast was born. Mike earned a bachelor's degree in business administration and a master's degree in accounting. He is a licensed CPA. He's registered. When Mike is not in the office, you can find him spending time with his family and friends. And he is also an avid sports fan. You can often find him rooting for his Milwaukee Brewers, Wisconsin Badgers, Milwaukee Bucks, and Minnesota Vikings. Sorry to hear that, but nice to meet you, Mike.
Yeah, thanks for having me.
Yeah. So this will be fun. So before we even, get into any game and specific strategies, just kind of give us an idea of, who Mike is and, how did Mike become Mike?
Yeah. So I've really I say I've been an entrepreneur for the majority of my life, just simply because I have always worked for myself. And so I think the journey kind of started when I was really young. I was probably 7 or 8 years old, and my dad used to go to a lot of auctions. And so he'd buy these old things that I felt like nobody wanted, and he'd resell them on eBay and do things like that. And so I would always go to these auctions having no clue what was going on, usually play pool in the back or do something to keep my mind away from an auctioneer. And he bought this one lot, and it was a box full of about 1,000 bottle caps. And they were just used bottle caps of some type of soda. I don't even remember what soda it was, but they were used bottle caps. And he's like, here's what we're going to do. We're going to take these 1,000 bottle caps. We're going to put them into little baggies of like 25 a piece, and we're going to resell them on eBay for more money than what we paid for them. So I think he got this box for like $25, something like that. We put them in different baggies, resold them on eBay, and each baggie sold for like 15 or $20. So we're taking 1,000 bottle caps, putting them in lots of 25 and reselling them for, obviously much more. And I kind of say that was my first forte into this idea of business, or at least arbitrage. How can we buy something and resell it and make money off of it? Find someone that maybe finds it more useful than everybody else that was at that auction and resell it in that area. I started doing things like that with my dad at a young age, and eventually got into, at the age of 14, the first kind of what I say real business. And it was online marketing company per se. And it was kind of a unique area of online marketing inside affiliate marketing. And so I did that for a long time. And basically affiliate marketing is, we kind of serve as a middleman. We find people that are really good at marketing. We find people that need new sales or need leads or whatever it might be. And we connect them and take a little chunk in the middle for kind of being that connector to them. And so that was my first business. We did things like, let's say Netflix this was kind of right at the beginning of Netflix, but at one point they were in a situation where they said, we'll give you $45. We'll give you $50 for every person you get to sign up for our monthly subscription. And what we would do is we'd find someone that had access to people that would potentially want to sign up for Netflix. And we'd say, we'll give you $35. And in the middle, we'll keep 15 or 10 or whatever that number was. And so throughout my career, I started a business, sold it. It was a very small type business within that industry. Ended up partnering up with some folks that we kind of took it to that next level. And so we were in a situation in that business where we sometimes were the affiliate. We were the person that did that mass marketing. We had people on our team that were really good at marketing. Other times we would create our own product, and it wouldn't necessarily be our own product, but we would white label. We'd create our own brand, basically put our label on somebody else's product. And since we were really good at marketing, we would market to our own white label product. And so throughout kind of my career, going through college, this is what I spent my time on. It was an online marketing industry. And as I was going through college, I'm like, I love this and we're very successful. We're doing good. We'd also have some really bad points where, there was a business that I was in partnerships with, ended up running out of cash flow. Things got tough and it broke apart. And we started a new business. That one was very successful. And some of them we had successful exits on. Some of them were massive failures. And so throughout that journey, I said, although I love doing this, I also just want a backup plan. And so that's when I had this idea of going to school to be an accountant. And so went to school, got my accounting degree, ended up sitting for the CPA exam all at the same time while running these online marketing companies. And the last company that we were with, there was a partner. There were 7 partners in that space, and each partner kind of wanted to take that business into a different direction. And so we said, instead of trying to pull one business into various different pieces, why don't we just kind of split up and we can each focus on what we do best? And that was my opportunity at that point to go full on into this accounting space. And because this industry of affiliate marketing, kind of a niche industry in online marketing, was so unique, we built a good reputation, and I was able to start out my firm focusing specifically on that industry. And I kind of say it's kind of funny because that was back in 2013. This idea of working from home and cloud-based accounting and taxes really wasn't alive back then. But because of the industry I came in, was a lot of younger generation. Everyone worked around the country. That's exactly what we did. We started out from the beginning as a fully remote virtual accounting firm. And so kind of built out that, worked in that industry, started to get into different industries, helping small business owner with taxes, payroll, tax savings, bookkeeping, things like that. And which eventually kind of led to this idea of the Small Business Tax Savings Podcast. And this podcast really grew out of this idea is that we would talk to business owners, big and small, and they just didn't understand this idea of saving taxes. So everyone, when they think of taxes, they think of now they're thinking about preparing and filing those tax returns. And ultimately, that's just taking information and sending it up to the governments and paying your bill. And so my focus, after having all these conversations with small business owners, after seeing all these different areas within, successful businesses that failed, was how can I get this idea of tax planning into the hands of the everyday business owner and help them change their mind and focus. Whenever they think of taxes, they're not necessarily thinking of tax filing. That's important. That's required by law, but I want them to first think about tax planning. What can I do on a regular day-to-day basis throughout the year to ensure that I'm paying the least amount in taxes as legally possible, so that when I file my taxes next tax season, I know that I'm already done the legwork to make sure I'm paying as least as possible. So that's really kind of where my passion is now, is running that podcast and kind of working on, how can we help small business owners with this kind of main mission of understanding that no matter what your size is, whether you're making $10,000 a year or $10 million a year, there are tax strategies out there that you can utilize to lower that tax bill.
Man, you are a arbitrage ninja, right? Like how you started and like where you are now is definitely very, very interesting. And before we kind of get into more of like the tax stuff, I have a bucket list of questions I want to ask you there. When you talked about like you exit some businesses, you had some major failures. Like can you talk to like what did you learn? Like in that during that period of like failures and success, like what patterns did you notice like within yourself that, that made you, make or break? Like how did you know what I mean? Like unpack that a little bit more.
Yeah, absolutely. So, especially on the failure side, there was some failures that I had. It was just a business of my own. So, as an example, we did some software development. We created this project management system specific for accountants to try to help them manage everything in a cloud-based environment. Because again, back in 2013, this idea of cloud-based accounting or tax just wasn't as popular, and there wasn't much software out there. So we spent 3 years building out a software, had all these different features. And by the time we came to launch, there happened to be 5 competitors out there already, which when we started, there was none, and 5 competitors that were pretty well funded, and we were a bootstrapped company. And so we tried to get off the ground and it just didn't work. And that was an example of one thing that we learned there is this idea of an MVP or a minimal viable product, in saying that It's not, you don't need to have whatever you're offering, whatever you're creating. It doesn't have to be perfect to be able to bring it to market, because there's a good chance that you're either going to bring it to market and you're too late. Someone's already done it quicker and better than you, or you might bring it to market and it might be something that people don't even want or need. And being able to find that out much earlier in the process can save you so much time, energy, money, and everything else. And so I always kind of look back at that software development piece and say, if we could have known at the beginning what was going to happen, we would have created something that maybe just managed tasks. And we have a piece of software, let's say we want 10 main features or modules in the software. We could have started with one, got it to market and said, hey, there's some interest here. Now let's build on it. Instead, we went to 10. And by that time, it was too hard to try to get all that time that we spent building that, try to get that back and get customers inside the door. So that was a failure that we had that I definitely take learning from. And I look at it not just as a software piece, but even as a service level within our accounting firm. We went from a space where we did a lot of just compliance work. We'd say we do bookkeeping and tax filings. And we said we want to take that up a notch. We want to help people grow their businesses, which bookkeeping and taxes are requirement, and that's going to be needed. But how can we move to advisory services? How can we take that next step in helping them? And through that process, when we're at an advisory, we would do one little piece at a time and say, hey, are clients enjoying this? Are they seeing the value in this? Is this helping them? And once we saw, yeah, it does, well, let's add another piece onto that. And let's add a piece onto that, versus starting at the beginning, at the top, and then trying to say, is this even useful? Now we spent a bunch of time trying to develop it. So, we kind of use that MVP idea, not just in a software piece, but whether you're offering a service or a product, it's a great option. We've seen failures in, some of our businesses that were failures were in partnerships, just having multiple ideas, wanting to take a company into different directions. And so, partnerships, I think so many people initially think, let's get into business. Let's partner with somebody else. And I think the reason that people do that is one, this idea of fear. As a business owner, we're constantly dealing with fear, whether we're just getting started, we've been around for 20 years, whether we're failing or we're massively successful. Business owners always have this idea of fear. And I think one way that people utilize to distract from that or cut from it is saying, let's partner with somebody else, because now we have somebody else on this journey with us. And what I've learned from that is when you look at partnering with somebody, it should, if you're doing it out of the avoidance of fear or this idea of now you have someone to go along with you, that's the wrong reason to partner. If you're partnering with someone because you want to have a service offering and maybe you're good at one thing but not good at another, and you need that partner to do it, or you have someone that's really good at you guys work really well together, that's more of a reason to partner. So I always say, when getting into a partnership, understand your reason and purpose for doing that, and also understand the people that you're getting into a partnership with, and making sure that that is something that you think can last long term, as well as what happens when problems arise, what happens when conflicts arise, because it's going to happen. And just by having some of that groundwork laid out from the beginning, it's going to make that process so much easier and being able to fight through that so much easier.
Dude, so much. That was sick, man, because the MVP thing, I failed as well with something very similar, where it's like you over-engineer, you over-design, and you don't launch something to see if you even have traction, because I call it dark room syndrome. Like in high ticket sales or in sales in general, I had lots of conversations with different entrepreneurs and business owners. And the big difference I've always noticed between the ones who crush it and the ones who never get even the business off the ground is the people who don't get the business off the ground are always like scheming and strategizing and planning and trying to engineer things, but they haven't even talked to any customers. Zero, like no prospect. It's not ready yet. So that landed, man. And so I always recommend for the audience, like you should read The Lean Startup by Eric Ries. It's a great book. It's definitely the startup Bible for aspiring entrepreneurs, specifically more in the tech field, but it's some really great gems in there. Something else you also said that I thought was super, super cool was when you talked about partnerships. That's something that not a lot of people talk about, because it's like you said, like people do partnerships because they don't want to take ownership of that possible failure, or even like being lonely, because entrepreneurship sometimes can be a lonely path because you have to be a master at saying no, right? No to things in your personal life and your professional life, right? So I thought that was super interesting. So let's pivot here, man, because it sounds like that software development situation taught you some lessons to really like crush it with your firm in terms of keeping things simple, getting in front of clients, seeing if there's traction, and then doubling down on that. Talk to me about like in your accounting firm. I think this is super cool for the listeners. What are some of the most common mistakes you see, and from a tax planning perspective that you see in like entrepreneur, like what's a common like a huge no-no that you see in the space for entrepreneurs, business owners?
Yeah. And just before I get into that, I'll kind of give you an example too of that MVP idea with our podcast. When we first launched our podcast, we basically had some videos that we had on YouTube, and we took the audio from those videos that we shot a while ago and threw them on a podcast. So it was like 3 of them and didn't do anything. And literally like 6 months later, someone hit me up and said, "Hey, I love your podcast. I'm interested in more about your services. Where can I get in contact with you?" And I kind of sat back. I'm like, what podcast? I have no clue what they're talking about. And it came back to realization that, like we put something up 6 months ago, completely forgot about it, but there's interest there. And that was kind of our turning point of saying, okay, maybe there's something here. Let's do this more regular. Let's stay on top of it. Let's take this a little bit more seriously because there could be some growth there. Again, we could have spent hours upon hours and days and weeks trying to develop this perfect podcast. We said, no, let's just get something out. And even through our podcast growth, same thing. When we first started, it was just like, I would reshoot and do a bunch of retakes to our podcast. Finally, I got to the point of where it's taking too much time. Let's just get some raw content out there and perfect it as we go along into this podcast. So if you listen to like first 10 podcasts, they're going to sound a lot different than what you listen to now, simply because you just have that growth by learning from actually doing the practice. But when we look at, what is one of the main things, one of the biggest mistakes we see small business owners make, it's just this idea of failing to plan. Again, as we kind of talked about, most people think of taxes, they think of preparing and filing tax returns. They don't think of tax planning, and they also don't think that they're big enough to save on taxes. That is the biggest thing we hear. And we get this from pretty big businesses, what I would call a big small business. We get people saying, I'm not big enough. I'm not Amazon, so I can't save taxes. And then we get this from the really small businesses saying, I'm not a small business. I'm just a mini business. I'm a micro business and I can't save on taxes. And it's just going through that mindset and just shifting that a little bit to think about how we look at taxes. And so when we look at small business owners, the biggest thing I can say is to get this idea of after-tax and pre-tax dollars. As a W-2 earner, let's say you're not a business owner, you're just working for somebody else. You have gross wages. That's going to be, your salary. Then your employer takes all these different taxes out, and whatever's left over is what we call after-tax dollars. So you go and buy something for your home office that's using after-tax dollars. You get no tax deduction for that if you're a W-2 employee. Now, when we shift that and we look at it as a business owner, you get your revenue or your sales within your business, and you have all these expenses that go into it, and whatever's left over is your profit, and that's what you get taxed on. So we kind of think of this idea as how can we shift after-tax dollars into pre-tax dollars? And this is usually when we talk about tax planning, this is like one of the first steps that we make and first steps that we try to introduce people into this idea of. Going on that same example, let's say COVID hits and you're a W-2 employee and you get sent home. Now you're working from your home. You need to go buy or you need to go buy a desk. You need to go buy a chair. You're using your home internet. Your heat's running more than you was before because you're home now. You get, as a W-2 employee, you get no deductions for that, but you're using money that's been taxed to purchase all those items. Now, as a business owner, you get to deduct that desk. You get to deduct part of your home office. You get to turn that spending that you did anyways, that typical after-tax spending, into pre-tax spending. And so when we look at this kind of idea of maximizing deductions, or how can we really kind of utilize that as a business owner, I always say the first step is not to go buy something you don't need. So many people say, well, can I buy a car at the end of the year and save taxes? Sure, that's going to save taxes, but do you need a car? Do we need a new car? Do we need to take that money out? And the answer most likely is no. The answer better is, how can we look at what you've done spending on already how can we find a business purpose for that? Instead of using after-tax dollars to buy that or purchase that, how can we turn it into a pre-tax expense? Things like hiring our kids, things like meals expenses. Are you meeting with friends or family that happen to be a client? How can we find the business purpose to spending that you're going to do anyways, so we can turn an after-tax dollar into a pre-tax dollar? So when we look at this, the biggest mistake we see is people not tax planning. It comes down as easy as that. Look through your personal expenses and say, oh man, is there potentially a business purpose for this? Can I find a business purpose for this? If so, now let's run it through the business. Instead of thinking of this, I'm just going to buy things that I don't need to get a business deduction. That's the last thing that we want to do when we look at tax planning.
Yeah, I think you said something that landed, like with when you hear about the deductions, you go and like, oh, I can go spend more money and save more taxes. But what you realize is that you're just spending more money as well. Like you're spending $1 to save 40 cents, right? Or 30 cents or whatever, right? And that was a huge shift for me, because I can remember when I first learned about deductions, I was just like, oh, I can just go spend way more. I can just, go buy whatever, go spend money, right? And there has to be a balance, obviously, right, with tax deductions and also like being very profitable and also, showing good income as well. Because if you want to get access to the bank's money, you gotta look good on paper, right? So like, talk to me a little bit about like that balance of like, yes, we want to save money on taxes, but we also want to make sure that, the balance sheet and the business is profitable. So like, what's your take on that subject?
Yeah. In this, I always say everybody is in a different stage of their business, and depending on where your stage is in your business and your life is also going to determine a little bit about what you do on the tax side. As an example, if you're a business that within the next 5 years, you plan to do a sale, you want to sell your business, well, you might leave off some deductions that you could take because you want your P&L to look a little bit better. You want your business to look a little bit more profitable because you have an eventual sale coming up. So you're going to pay a little bit more in taxes today to hopefully get way more than that in a potential sale due to some of those changes that you make. Same thing with buying a house. I always, first off, when we talk about purchasing a house or something like that on the personal side, and most business owners, the idea is let's run that profit as low as possible. If we run that profit as low as possible, we pay least amount of taxes. But from a banker standpoint, if I'm seeing that and saying, hey, you want a mortgage, you don't make any money. So how can we make, how can it make sense for us to give you that mortgage? The first thing I say is if you talk to a lender that instantly kind of writes you off as a business owner saying we can't get you a loan, I would say find another lender. There are so many lenders out there that can be business, that can have an open mind when they're working with business owners. There's also a lot of lenders out there that just don't get business and don't understand this idea of tax savings, that they're just going to kind of write you off and say, you don't make any money, come back to us when you do. So when we look at those ideas of getting lending, I always say just double check or go to multiple lenders until you find one that understands business owners, because what they do is they call add backs. If they can find and separate, kind of what expenses in that business are really related to you, are really related to the personal side, and would be expenses whether you had the business or not. We just took advantage of use it because we're business owners. We took advantage of the ability to utilize as a business expense. They might add back some of those items to help qualify you for a little bit more profit, even if you are still showing lower. We also look at tax strategies too, and you might be in a situation where, sure, you're not going to take as much deductions as available to you because we are looking for a loan. We are looking to sell. Well, in situations like that, there's also some advanced tax planning. There's tax planning that we can do on the back end of it. So instead, we might be able to show a big profit in our business, but instead now we can also show some losses in different areas, or we can show some deductions on our personal side that are completely not related to the business operations. And that can open up some doors to some the ability to make that sale look a little bit better, or to make you look a little bit better on paper when we're looking to look into a mortgage. So when we look at tax planning, it's also understanding where are you at in your business life cycle, where are you at on the personal side, and how is that going to intertwine? How is that going to work within how your business is operating as well? And also probably looks at, how high is your income? If you're making typically profiting, your business is profiting $500,000 a year, it's going to be really hard to come up with deductions to completely bring that to zero potentially. So we might be looking at more advanced tax planning. Let's look at things that we can use as a charitable deduction, and that might be on the personal side. So there's different levels of tax planning too. It's not all just for business owners. There's a lot of tax planning for high net worth individuals or high income earners that you can do on the personal side, even with normal W-2 income as well. And so it's just kind of a balancing act based on where you're at in that cycle.
This is good stuff. So I feel like every entrepreneur usually goes through like 3 stages or a couple stages in the money mindset, right? Obviously, the first thing is switching from W-2 to cash flow, right? Like getting paid, guaranteed, getting paid for your time versus being paid for your problem over, cash flow, right? Like, can I get paid more than twice a month, right? Can I get paid every day, every hour, every minute, right? The next thing usually, which I feel like I'm shifting more towards, is equity, right? So, because that's a great tool for wealth. And we know a few tools, obviously building business equity, like obviously your business is growing. How can you reinvest that money in the business and grow it and things in that way, eventually maybe sell some of it to a hedge fund or private equity company or a private equity firm, or do you sell, do a successful exit? Or there's also real estate, right? So I'm like doubling, tripling down on real estate this year because it did a really great job last year. I was like, all right, I needed like 1031 exchanges, all these different things. So like, talk to me a little bit about like the strategies or your methodology or your ideas around like business owners and entrepreneurship, like building like a real estate portfolio. And like, how can that also help with tax planning and hedge, right? Just in case your business can COVID, right? You can get a monkey wrench overnight, right? So like, what's your strategies or what's your idea around like entrepreneurs, like owning real estate and having a real estate portfolio?
Yeah, it's all looking at different buckets of income, right? So when we look at real estate, it's just like another bucket. And so what we really kind of split, when we look at your income, we want to split it into 2 pieces. And the first piece is ordinary income. These are going to be things that you make that you're actively participating in, that it's like a business. So this could be W-2 income. This could be a business that you're running. This could be even, let's say, you for a living are a realtor, or you for a living flip houses. That's going to be ordinary type income. Then from there, we go to the other side of the bucket and another side of the page, and we look at passive income. These are going to be investments. These are going to be rental properties. These are going to be, savings accounts, various mortgage brokerage accounts that you might be in. That's what we call passive activity. And so it's important to not get those two confused as they get taxed much differently. You have your ordinary bucket and you have your passive bucket. And we look at rental properties as an example, or real estate rental, that's going to more be on that passive side, where it's more of an investment. You're not actively necessarily participating in that rental property. You've invested into it and it just kind of runs by itself. You get those rent checks coming through. And so we, always encourage our clients that rental and real estate is a great place to invest your money for when we look at it from a tax standpoint. Because more than likely, if you buy a rental property as an example, you're probably going to cash flow, even if you have a mortgage on that, you should be cash flowing day one. Your rents should be covering your mortgage and any kind of, any other maintenance you have, and at least have a little bit left over or a big amount, depending on how great the property is performing for you. But the beauty behind that is we're cash flowing, but because of the write-offs that we get with real estate, we're not showing any profits. So we're getting cash, we're not showing any profits. And that's where the rental piece can be a great opportunity, at least for the good amount of the good portion, at least, 15, 20 years of that rental property, you're showing income, but not having to report any profits from it. And so it's just kind of looking at this idea of, how can we take our income and match it in the right buckets, find the right tax strategies for the type of bucket of income that we have that makes sense for us to eventually get, again, to that lowest tax bill as possible. And so that's always, that's never just a business running a business. That's never just having rental properties. It could be a combination or some type of, work of multiple different revenue streams, both ordinary income and both passive income. And it's just looking at those streams and finding out what makes sense the most as far as taking deductions. In rental properties is a good example for even W-2 earners. This is also a way where we can take advantage of some of those expenses. Even though this isn't a business, there's things that we can take advantage of, some of those spending that we're going to do anyways. You want to take your family to Disney World. How can we find a business purpose for that? Maybe you're visiting a rental property. Maybe you're meeting with business partners. How can we find a business purpose to that family trip and at least get a portion of it tax deductible? Let's say you want to hire your kids. You don't need a business to hire your kids. What if you have a rental property? Could they be mowing the lawn at that rental property? Could they be helping with some maintenance that you might have? Now we're paying your kids for working your rental property that you're probably going to support your kids anyways. Your kid wants to go on a basketball camp. We're going to be paying for that regardless. How can we find a business purpose for that? How can your kid work in your business, your kid work in your rental property, get a deduction for it, and we're still paying our kids? And so that's, again, the shift of this mindset of turning after-tax dollars into pre-tax dollars. It doesn't just have to be business activity. It can be some of that passive activity like a rental property.
Love it, man. I love it. Passive income. Awesome. So we've covered a lot here already. So, what's something that you want to leave behind in terms of, some resources or tips? Like what's some other tips and tools that you could possibly give our audience to maybe take that first step towards like tax planning, you think?
Yeah. So, one strategy that I just kind of want to talk about, and this is more on that ordinary income side, is this idea of an S corporation. And many people have probably heard about this, maybe don't quite understand it. But when you have ordinary income, again, this is not going to be passive. This is going to be those things that you're actively participating in. When you have ordinary income, you're going to pay, assuming it's not W-2, it's a business that you're running, you're going to pay self-employment taxes on 100% of your income if you're set up as a sole proprietorship or a single member LLC or something like that. So let's say you're running a business, brings in about $80,000 in profit. You're going to pay your normal income tax rate, whatever that might be, plus you're going to pay self-employment taxes on top of that. And self-employment taxes are roughly 15%. And so on $80,000, you're looking at, say, somewhere around $6,000 or so in self-employment taxes. And so this idea is, how can we minimize that self-employment tax hit? And that's when we look at something called an S corporation. And basically, an S corporation is just a tax election. We're taking your LLC that you already have created, and we're electing for that to be taxed as an S corporation. So you're still going to remain the same name. You're still an LLC. We're just simply electing for it to be taxed as an S corporation. And by doing that, we're splitting your income into two pieces. As an S corp, you're required to run payroll, W-2 payroll to yourself as an employee of your company. So you have to pay yourself a reasonable salary as an employee of your company, and we pay self-employment taxes on that. But any money that you make over and above whatever is reasonable for the work you're doing, we take as a distribution or a dividend, and we don't get hit with self-employment taxes on that. So let's kind of look back at that example. Let's say we're making $80,000. If we're set up as a sole proprietorship or a single member LLC, we're going to pay self-employment taxes on that full 80. Again, somewhere around $11,000. Let's instead say we set up as an S corporation, taking that same business and just simply electing S corp status. And let's say for the work that we're doing, we predict that a reasonable salary for that is $36,000. We're going to pay self-employment taxes on $36,000, but the remaining 44 of that $80,000 in profit, we're going to take as a distribution, a dividend, and we're going to pay no self-employment taxes on that. So that simple switch from an LLC to an LLC S corporation could save us $5,000 to $6,000 in taxes, and that's year after year tax savings. So when we look at business owners, that is oftentimes one of the first steps that we take after we look at the maximizing deduction piece. S corporation is often one of the first steps we take. Now, there's some downsides to an S corporation. With an S corporation, you have to file a separate business tax return. So everything's still going to flow through to you personally, but you have to file a separate business tax return, and it's a little bit more complex, and that costs a little bit of money. You also have to run payroll to yourself. So if you don't have employees already, there's going to be some cost to add W-2 payroll to yourself as an employee. Now, if you already have employees, adding another one's not a big deal. But because of those two downfalls, that separate business tax return, which is a little bit more complex, and having to run payroll to yourself, typically we say it doesn't make sense to do an S corporation until you're at about $50,000 or so in profit. So once you get that $50,000 or so in profit, those costs to do that separate business tax return, to run payroll to yourself, are going to far outweigh the tax savings that you get from that. So that's kind of this idea of an S corporation. That's one of the first steps that we encourage business owners to think about if you're in that income level as a strategy that you want to look to. And so we talk about those types of things all the time in our podcast. And that's really the idea of this podcast is, again, just to bring awareness to people about the tax saving potential that's out there. So I'd say if you're a business owner and you haven't really thought about tax planning, when you think of taxes, you're thinking about that tax return you're filing, but you don't really implement anything throughout the year to think about, okay, I can save taxes by doing this. Check out podcasts, do some research on tax planning, find out ways and different strategies that you can use to implement throughout the year to make sure you're paying the least amount in taxes as legally possible. And, every tax strategy is not going to make sense for everybody. So it's picking and choosing what makes sense in your scenario. We love this idea of hiring your kids within your business. But if you have no kids, obviously, that strategy is not going to be very useful to you. So it's looking through the strategies that we talk about on the podcast, the strategies that we go through and finding which ones are specific and useful for you, and then doubling down and deep diving into that and making sure that that's something that you're putting on your implementation list. Now is a great time to save taxes. Now, unfortunately, once the year hits 12/31, once the year's over, many of those tax saving strategies are out the door. They're gone. And there's not much you can do during tax season. There's some strategies available, but not a ton. But now, if we're getting hit with a big tax bill this year for 2021, we can look at that and be like, okay, might have to bite the bullet on that one. But let's see what I can do now, early this year, to change that so that next tax season, I know that I did whatever possible to lower that tax bill.
Man, I love it. Thank you for that. And we covered so much today. I really appreciate you for coming on and really just giving us a ton of value on, saving on taxes and talking about your entrepreneurial journey. This was great, man. I really appreciate you.
Yeah, thanks for having me.
Awesome. So guys, Mike, where can we find you?
Yeah, you can find us on you find our podcast on any podcasting platform. Just look up Small Business Tax Savings Podcast. Otherwise, if you go to our website, you can go to taxsavingspodcast.com. Within there's our podcast information, ways you can reach out to us, social media, all around social media. Just type in Small Business Tax Savings Podcast. And we also have a tax minimization program. This is kind of what we call an accountant in your back pocket. So, we list out all these tax strategies that we talk about on the podcast. We do implementation guides. We do monthly group trainings where we kind of deep dive into specific tax strategies. And we also say you have unlimited access to our team. So you have that question of, can I deduct this? Or how do I hire my kids in my business? Or should I be an S corporation? You have unlimited access to our team to ask those general questions via email. So that you can also find on our website. Again, taxsavingspodcast.com. We also, with every podcast, do a blog post. So if you're one of those persons that say, hey, I like to listen, but I also like to read about it, every tax strategy that we go through, we do a blog post on. So I always recommend go through our previous episodes, find the topics that are going to be most important to you, and start reading about them, start listening to them and finding, how can you implement that in your business?
Boom. Amazing. So guys, you found Mike. Go check out his pod, go read his blog, go send these guys a shout out. Once again, Mike, we really appreciate you. And we've made it to the end, guys. So thanks for coming to the campfire. Don't forget to give us a rating, a review, send us a comment. If you want to be a guest, come play on the pod. Go to campfirecapitalism.com/guests and let's play. All right, peace.